Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are fired up, ready to go, doing what we do each and every day. A little bit later today than I am normally, and that's primarily because I felt like sleeping in, and it was a rainy night here in Houston, Texas, and a good night to just kind of cuddle up in bed. But that's okay. Getting our day started off right. We have a couple of things to review today. We're going to take a look, obviously, at our same futures markets that we have. Tomorrow, remember to join us for our Trader Summit. We're going to do live trading starting at 8 a.m. Central. So we're going to start with a live trade room at 8 a.m., and then Ryan Watkins is going to talk trader tactics, and then we're going to hear from Al Davidson on trader taxation and Patrick Zielbauer on futures volatility. So that's our morning, and then after lunch, we're going to be hearing from Corey Lane on options specials, as well as Justin Krebs on Build a Bear Workshop and how to prepare for a bear market. So full day, going to be a great time. And then at the end of the day, we're all going to sit down and have a frosty beverage and have an open forum and a roundtable discussion. So looking forward to having you join us. If you've not registered, go to tradersarmy.com/trader summit. It starts tomorrow morning, 8 a.m. Central. So look forward to seeing you there. So let's go ahead and dive in to our markets today. So starting with the S&P. So our ES, we are down 20 points. Now we can see that in the overnight last night, we hit our demand area and got a little bit of a rally from there. Now we did have an update that came out last night at Traders Army. One of the things that we do is we update our trades, and we've actually just changed our format for the updates with daily market commentary updates separated from live trade rooms, which are separated from our trade worksheet, because we do have a trade worksheet in there as well. And so we talked about the fact that the 15-minute demand zone mid-entry moved enough to move the stop to break even during the Globex sessions, meaning we didn't believe that this was really going to hold, and that was about the case when we saw that. And it didn't hold. It's fallen off since that point. So if I take this and move it to the 4-hour, in looking at our 4-hour market, you know, we haven't really put in a definitive lower high. We had a definitive lower low, but we didn't put in a definitive lower high. And so now if I'm looking for a reversal, I'm going to come to the 15-minute chart and look and see where might a reversal be above me. And I can see the potential that we could see price reverse right up in here this morning. So keep an eye on this one if you want a short-term day trade opportunity right in there. Now, it's not the best of levels because we've already come close to that area once. And so, you know, to be a bit more conservative here, it might make sense to use this as a confirmation style for an entry, because we came close to it right in here and we're unable to penetrate that area, penetrate that zone. Now, up above us, we certainly still have this region as well. I actually think this is a slightly better level because of the time of day that it was formed. But both levels do indeed exist for a potential reversal for today. Now, what about below me for demand? So if I look below me for demand, frankly, I don't have any super quality demand to anticipate in the 4-hour chart. And so I would keep looking for good areas of opportunity below that current price. Next, let's take a look at Russell. In the Russell, we had the same 15-minute level where we got a nice little bounce off of that zone, and then price just kind of stalled during the day. And so we got a little reversal, made a little move off of that zone, but if you follow the 6-candle rule, you realize it had gone basically nowhere. And so you, at the very least, should have gotten the stop out for break even. But it did set up for a breakdown. So some of you may have taken the breakdown trade in the overnight. It did set up well for a breakdown. Now I would look up here for the potential reversal, very similar to what we have in the S&P, formed right there at the European market open. NASDAQ, similar picture. If I go to the NASDAQ level, we can see we hit it 1, 2, 3, 4, 5, 6 candles later. We were still inside the zone. It hit in the overnight hours, so you may or may not have taken that setup in that trade, but it's definitely it's definitely now rallying up a bit. If you're going to go short the NASDAQ, remember we talked about the fact is the weakest of all of our markets to short, so I don't know that it would make sense to short the NASDAQ at this point. If you're going to, like I said, somewhere up in here would be your reversal point. You could go theoretically candle to candle a bit before that, But being our strongest market, it may not be the best one to short, although we do have a bit of a head and shoulders pattern that's kind of forming up here. And with that head and shoulders pattern forming up, it might make sense to take the breakdown off of this little bit of a level if you are so inclined. I still prefer the S&P and the Russell as better trades. Crude oil last night, crude oil came into our hourly level. We got a little bit of a move away the first time. So if you took that first time, you got rewarded with that little move away. Well, the second time we came into the level, it switches to a confirmation entry. We traded halfway into the zone, allowing us to get into the confirmation trade, and you should still be in that position. That trade is still running, so our target on that position should be somewhere. I would say your first target down there around 37.85, and your eventual target could be all the way down here at 35.50. I would take your stop and move it to break even at this point. And the reason I'd say it's worth moving to break even is because we've put in additional supply levels above us. Now, if you want to try to take advantage of this move down and you feel like you've missed it, if we rally back up into our London open period, you might get a reversal point in there. Gold, we talked about the breakout yesterday, and the fact that we did get basing right here before the level gave us the opportunity for the breakout in gold. It came up and hit our target in the overnight. So those of you that took that one should have been nicely rewarded on that gold breakout trade. Now we're pulling back off of this hourly supply level, and that hourly supply level is the one that comes all the way back. Let's go further back to see it. 360-day chart doesn't give me enough, so I've got to go further back than that. We'll do as far back as I can go intraday. So we'll have to go 3-year daily chart. Still not going to show me back. So it goes back very far. We got to go. There we go, all the way back to the weekly chart. And that's the level. We had looked at that one a really long time ago. Now, it's hit there a couple of times, and it stays supply until it's no longer supply anymore. Now, by the way, am I saying that there's a bunch of orders left over from when this was created? I mean, could there be? Yeah, there might be. But in reality, it was a great target for our long. And if you didn't take the short, that's okay. But I think that there's now a good opportunity to get long on a pullback, potentially into this region back here. Now, that's an unbalanced wick over wick area, but it's also a former area of resistance, which makes it a fair price value zone. Next, in our bonds and currency markets, so our ZN, we are chopping sideways below our breakout area, above our demand, which tells us the same thing we've been saying, move along. The Aussie. So the Aussie we did have. So we had a couple of currencies that had breakout candidates that none of them gave me the basing required for the breakout. Right. So the Aussie popped above this level, but we hit it once, twice, and you need 3 touches for a real breakout. We need basing on that third touch. We didn't get it. It just popped above, which is why the level failed. Now looking above us, you've got a lot of these very wicky areas up here that might be good levels to anticipate a reversal. So if price comes back into that region there, we can look for it. But this isn't our best currency market. The euro in the overnight came down to our wick over wick level, and we got about a 2.5 to 1, 3 to 1 move away from there at this point. So you've gotten that one, and it's come to the opposing supply level. Now this traded all the way to the bottom, so we can't use this level any longer. But this was a perfect picture of a wick over wick above a pivot low. So hopefully that trade transpired for some of you that trade the overnight markets. So I now need to look lower to my next level of demand, and it frankly doesn't come into play until down here. So if we see that currency continue to fall, let's look and see if we get some sort of basing that allows us to re-engage that short, or you could theoretically go candle to candle on the hourly chart at this point. Next, the Canadian dollar. Same thing in the Canadian dollar that we saw in the Aussie. We got 1, 2, and then our third touch was price popping above, right? We popped above without the prerequisite basing. And that's one of the things that we talked about in our update, right? 6C and 6J both broke out, but neither had the basing required for entry. And now the level has to be a retest area. Well, meaning that if we found quality demand, then it would give us an opportunity for a retest as an area to go long. Well, moving up into here, this area of demand that was created was a retest of this little area back here. It's not the cleanest of zone no matter which way you look at it. And so you didn't have any super clean demand areas as an opportunity to get long. And so now I still say it probably makes more sense to look to the short side. Here's a little area in here, but I actually like this unbalanced wick over wick area a bit better somewhere up in this region. Great British Pound and Japanese Yen, our last two markets. The pound is a little bit stronger than our other currencies, so it's a bit more expensive to go visit jolly old England since the pound is rallying. But keep this for a potential breakout above here. That would be our best market for an upside breakout. Japanese yen, another one that broke out, and unfortunately, this is one of them that the basing just didn't occur, allowing me to get in, so we miss out on this kind of a move. I do, however, still have this, which is the origin of the move, right? We would consider this a speed candle. This is a speed candle, and speed candles tend to get retraced. So at the origin of that retracement, that's where our long potential would be. I hope you guys all have a phenomenal trading day. If there's anything I can do for you, as always, send us an email, support@tradersarmy.com. Thanks so much, everybody. Until tomorrow's live trader room, I look forward to seeing you in our live trade room tomorrow at 8 o'clock at the Trade Summit. Talk to you soon. See ya.